Hey guys, hope you had a great week. Sorry for missing a few weeks in a row, but kicking it right off with Draftkings DKNG. So as you can see on the 2-year weekly chart, it's sitting right near pretty heavy support around the 30-35 area, currently 36 bucks. It's fallen over the last few weeks about 45%. So nice little discount on DraftKings, more of a speculative name, obviously, as well. But I'm watching it over here and I kind of like it over here as well. So diving into the option chain and analyzing what might make sense on DraftKings. Just pull it up for you guys. Here it is. I would buy some time on this, looking at March or April option to expiration. Right now, the March OPEX, 110 days away. And IV is very high right now. Keep that in mind. But if we're buying more time, we can do a poor man's cover call, for example, if we're buying in the money or at the money. So I would look at buying March OPEX. Target would be 45 or so on the upside. So about $9 from the current price, or about 25%. Looking at the March OPEX, you could go with a spread if you wanted to, but buying a spread too far in advance isn't advised. I would probably go with either a 30 strike or 35 strike for March OPEX, and then sell premium on shorter duration contracts. So for example, long at 35, your break even is 35 plus 5, let's call it 585. So roughly 40.85. And then what you could do if you wanted to is you could go to the December OPEX, which is a few weeks away, and sell premium above your break even. So for example, you could sell the 44 or 45 strike contracts, shaving your premium down by about 40 cents or 50 cents. If you want to go right around your break even area, you could always sell the 41 strike for 3 weeks out. That'll give you about 90 cents in premium, reducing your cost basis from $5.85 down to about $4.95 roughly. So that could work nicely, 3 weeks expiration on these contracts. And then what you do is sell above your break even for January, then February, then March as well. Keep in mind, these contracts will buy you another earning event, which will be a volatility inducing event as well, right? Next up, I want to look at PayPal, which I discussed last time I made a video. And we're going to look at that right now. So looking at the chart, pull it up right over here. Where's that chart? I had it here. One sec. Sorry, guys. So here's PayPal's chart. We can see that it's fallen pretty substantially over the last month and a half. It fell from a high of 273 on October 18th down to a low of around 184 last week. And we should see a pretty heavy bounce soon. There is a fat gap at 230 area. If I draw the 1-year chart on the daily, you can see massive gap right over here, right? Put an arrow right here. And that gap would be at 229.42. So I do think we fill that gap in the next couple of months. And we likely see a push back to 205, 206 area very, very soon as well. That being said, I would still buy more time, as with recent COVID fears, the market could be volatile and you might see some downward movement as well. The area I'm targeting on Qs is roughly 380. So another 3% pullback or so. As I speak right now, futures are positive. So playing this on PayPal using options, pull up the option chain for you guys to see as well. Here it is. So we can see again for the March OPEX, right now you can buy the at the money contracts for about $16.50 roughly, 190 strike, meaning your break even is 206.50 or so, right? Obviously, these are more expensive. Implied volatility is still pretty high right now, lower than historical. But that being said, if we do see a run to the gap fill by March, which I think is highly probable, you're going to see a nice return on these contracts. If you go to 230, for example, these contracts would be worth about $40 each, right? So from the current price of $16.50, so about 200% return or so, right? Just a little bit under that actually. But the key benefit to doing this is that if you were to buy these contracts, for example, wait for a rally to 206 or 210 area, and then sell out of the monies weekly or a couple weeks out, you can recoup a lot of that premium, right? So for example, you might go long here at the 190 contract, and then wait for a rise in the price to 205, 210 area, and then sell the January OPEX out of the money, perhaps at 220 or 230, for example, right? That, I mean, right now, as I speak, the January OPEX contract at 220 gives you about $3 and change, meaning that your debit on the March contract at 190 strike is about 1650, right? If you pull in $3 and change, that lowers your debit amount down to about 1350 or 1330 or so, meaning your break even is 203.30. Again, high probability event, it'll expire in the money and above your break even price as well, right? PayPal's, not going anywhere at all. They're a very profitable company. Revenue growth is pretty solid. They have a great series of products as well, very necessary for e-commerce. They are part of the foundation of e-commerce as well. So they've been unfairly beat up, right? They've fallen from 273 to 184 in the span of a month and a half. Whenever a blue chip tech stock falls this much, you buy with both hands, right? Obviously, manage your own risk, as I always say. Take the risk that you can afford to take on your own. Do your own research as well. Don't take my word as gospel, right? But I think that this is a great opportunity, and it won't be here for long, right? I do think we're going to see recovery over 200 very fast, and when that happens, people that notice this too late will be kicking themselves that they missed it, right? So that's for PayPal. Next up, I want to talk about Palantir, which is also pretty beat up. I'll pull up the chart on that. So here's the chart on Palantir. Excuse me. Palantir is over here. All right, so Palantir, again, pretty beat up. Last earnings report was solid. They fell from a high of around 27 down to a low of 20. They've held that line for the past roughly 4 days and bounced off that area. So I'm inclined to think 20 is heavy support. And keep in mind, on Friday, when the Russell was down almost 6%, Palantir was almost flat, right? So Palantir is in the Russell index as well, so keep that in mind too. Again, I think that playing leaps on Palantir is the way to go. So buying time on them, because again, you don't want to have to time a short-term move over the next 1 or 2 months. The idea here is that this has a potential to move to 50 plus in the next year or so, as they demonstrate quarter after quarter that the revenue growth targets are being met, right? So they're targeting about 33, 35% revenue growth year over year. If they exceed that quarter after quarter, the price will rise to 30, then 35, then 40, then 45, then 50 or so, I would say, in the next year, right? Keep in mind, in the past 1 year period, it's relatively been stagnant, right? I know they did a direct listing at about $10 a share, and they're $21 a share right now, but they are still undervalued based on their current growth estimates, right? So looking at the option chain again, just for some ideas for Palantir, if we pull up the option chain here, you can see that if you look at 2023, which is what I would target, right? The 20 strike, which are in the money, are about $5.50. So your break even is $25.50. Keep in mind, a couple of weeks ago, it was at 27 or so. They were fully in the money, right? The reason why you want these contracts is because it lowers your break even cost and allows you to sell poor man covered calls against your position over the next 1 year period, right? Which is very beneficial because as the IV ramps up, you can sell short-term contracts for nice premiums. And once we pop above 25 or so, you can sell out of the money contracts for probably around $1 or so a month out. That will shave your risk down by about 20% each time you do that, right? And lower your break even from 25.50 to 24.50 to 23.50, so on and so forth, right? Obviously, the risk here is that growth stocks get hit harder over the next few months as rate hike talks are being discussed, which they are. But that being said, again, Palantir is, in my opinion, one of the better long-term ideas for an investment, and it has the potential to 5x, 10x, 20x perhaps over the next 10 years, right? They're a SaaS business, solid balance sheet, over $2 billion in cash, good management team, and they're a very sticky business with a nice moat as well. Okay, obviously do your own research again, as I mentioned. I'm just speaking ideas here for you guys to look at. Next up, we'll discuss Crispr. So CRSP is a ticker symbol. Let me pull that up right now. Let me pull up the chart as well. So CRSP, you can see that we've fallen pretty heavily over the last year or so. Actually, we hit a high of 220 back in January of last year, fell down to a low of $95, then rallied up to a high of 170 or so in June, late June, right? So from the low in May 11th to the high June 30th, took about 2 months for that to occur, right? I think we could see a similar run pretty soon, where because the downside right here, I think is limited to around 75, maybe 70, but the upside in the short term is around 100 to 110. So the asymmetry risk here is very favorable. Again, this is a company that is focused on future growth, as they're a gene editing company, right? Do some more research on them online on your own time, obviously, and understand what they do before you place your money in a bet favoring the company's upside, right? So looking at options here on Crispr, the way that I would play it is probably through owning the stock itself, just because the option premiums are pretty high, and also the spreads are very wide as well, right? So you can see here that the implied volatility is 62%. That's very high, much higher than the historical. But the reason being is that it's fallen so far so fast. And this actually applies to every stock in the sector, right? So Editas, EDIT, Intellia has fallen a fair bit, NTLA, as well as Beam Therapeutics, BEAM as well, right? So looking at Crispr, I would either buy the equity itself or buy some contracts, call options that expire a year or more from now, right? You go to January of next year, right now, the at-the-money contracts are about $24 or so. So pretty high premiums, right? So your break even would be 80 plus 24, so which is 104, right? But again, if it runs to 150 or 200 again, that ends up being a 4x position over the course of a year. Not saying that it will happen. It could happen. It might not. But this is one of my favorite companies because they have a good balance sheet and they are solving a problem that's very important for the world, both for human health and medicine, and also for agriculture as well, right? So do some more reading on them and understand what they actually do. A great book to read is The Code Breaker by Walter Isaacson, same author of Steve Jobs' biography, right? Yeah, Crispr, I think, is a solid name. The last thing I want to discuss before we look at broad markets is Disney, right? So Disney is also very, very beat up. And here's a chart on Disney. They actually just announced this evening they'll be spending about $33 billion on new content next year. But you can see that over the 1 year period, they've broken down now. They're trading near the lows of November of last year, 146 area. And if you pull up the longer term chart, we can see that the previous all-time highs, which are around 150 or so, are acting as support right now. If we break down further, it's possible we gap fill to 125, but I don't think that's going to happen, as we've already fallen from around 180 to 148. The all-time high was around 200, so pretty nice discount of about, what is the discount here, 25% from all-time highs? Yeah, so nice discount on Disney. It's a staple name. I'm not going anywhere at all. Again, stock is a smart idea to trade it with. But also leaps, right? Buying in the money leaps, choose your strike price. Keep in mind, implied volatility is high right now because of the volatility we've seen in the market recently as well. Also Visa, they've been beat up pretty heavily too, down from a high of 250 to about 197. That again is a discount of about 20% or so. This is a solid company. They're not going anywhere either. And again, similar to Disney, long-term solid buy that will, should be in most portfolios, right? That's it for individual tickers. If you have any more requests, drop them below and I'll discuss them next week. But looking at the broad markets again, before we break off, looking at the NASDAQ ETF, triple Q, we can see that we overextended heavily to the upside, hit a high of 409 or so. From that bottom, reached on October 4th, we rallied very heavily off that bottom, right? We rallied from October 4th to November 22nd. So about a month and a half, and we went up about 17%. That's a massive move over a month and a half for an index. So now we've pulled back already from the high. We've pulled back about 4.5%, but I do think the previous all-time high area of 380 is where I'd like to see it touch before I go long on more tech names, right? So roughly an additional pullback from where we are right now would be about 2.5%, right? That's just my opinion, obviously, but I think that would make me more comfortable buying names like PayPal in advance. I do already own some PayPal call options, and I plan on adding to my position further. And yeah, that's it for Qs. SPY, similar discussion here as well, right? We ramped up very heavily from that pullback on October 4th to a high of 473, pullback over the past 4 days or so. I do think we test previous all-time highs at 454 area. So not a huge pullback from the current price, maybe $3 or so. But again, as I speak, futures are green. Likely to see bounce tomorrow. Will it hold? Who knows, right? If you have any questions at all, drop them below. I'll reply when I can. And appreciate you guys watching. Have a great week. Manage your risk well. And I'll see you guys next week.